Good evening, everyone. I wanted to take the time to talk about Micron. To start off over here, the biggest headline they actually have here is talking about how they expect to generate $7 billion in revenue, and about half of that is actually going toward high bandwidth memory, and this is their sales for fiscal year 2025. So what exactly is it about the high bandwidth memory a lot of these manufacturers or the fabless technology producers actually want? So if we take a look closer, we have the host, which is pretty much a GPU processor in these AI cases. And then you have the cube, which is multiple die that are stacked upon each other. And then we have these lines that come down. You see that set of three there and the other set of three? Those lines actually provide the benefits and capability of this HBM 3rd edition. They provide thinner packaging, shorter electrical path, less signal delay, less power consumption, and more interconnection density, high bandwidth memory capable. That is really what these want whenever they're training all of their models and whenever they're looking to run inferencing queries against those models locally. So over here, I actually have this video that I think is very applicable to their new technology they just released. So let me just start this out, set it 2 times. So if you take a look over here, we have the LLMs, and this is showing that they provide 50% of peak processing performance benefit over the existing model. Let me just continue. This is really showing how data centers consume 3% of the world's electricity and how that's going to actually increase over time. But with these processors, they are able to provide that efficiency throughput through their TSVs. I'm going to continue it now. This is talking about the TSVs that I showed you in the previous slide. And this is Micron's entire array of products. If you look over here on the screen in the middle chart, you have the GPU, which sits in the center, the logic processor, and then you have Micron's HBM3s that are surrounding it. All right, these layered dies that are sitting around here, they are providing the most amount of throughput to the logic processor. Personal consumption for PCs has really been in a bear market, and it's about to start a whole new bull market in that. And Micron is on the back of that, providing that memory for that. So if you look over here, 9600 gigabits per second, or 9.6 gigabits per second, 80% lower system standby power, 71% higher essential workloads for PC Mark 10 testing. This segment is talking about storage. If they actually do provide storage, which is a little bit different than memory that we're actually used to. When you think about memory throughput, we're talking about memory temporary storage. When we're thinking about storage throughput, we're thinking about long-term, like if you restart your computer, it's still storing the memory locally on the computer. So when the computer boots back up, it'll still have memory there. When you're talking about memory or temporary memory or DRAM, that's actually going to be erased as soon as the computer restarts. It all really comes together when you think of Micron. All right, they provide a lot of products, and when I think of the personal computing industry or the PC industry, that's more cyclical when you think of the data center. Data center lasts for a long period of time. You have all of these companies renewing all their technologies because they want to get into the accelerated computing, and that could be 1, 2, 3 year trajectory. But when you think of the PC market, how often do you buy a PC? Maybe once every 5 years. When you think of data center, maybe 2 to 3 years. In the recent earnings, some of the prepared remarks that the CEO Sanjay revealed was that in data center, rapidly growing artificial intelligence demand enabled us to grow our revenue by over 50% on a sequential basis, and we grew share in high margin AI related product categories such as HBM or high bandwidth memory, high capacity DIMMs, and data center SSDs. What he's trying to say is that when it comes to data center revenue, this is a lot more high margin than we're talking about personal computing or their existing product lines that they have released. Think about gross margins. Gross margins is that margins they're actually talking about, a higher margin north of 40 or 50%. So if we take a look at the historical revenues and earnings before interest and taxes that Micron's been posting, we can go back here on a quarterly basis in June of 2021, and we can see here that there was a bit of a slump coming into 2022 and through 2022, and around summer of 2023 we saw this accelerate, and around August and October it started to accelerate a lot more. As we see over here, they went from a negative 56% year over year on revenue, 3.752 billion in June of 2023, and the prior year was 8.642 billion. That is a minus 56.6% year over year, and since then it has been accelerating upwards. Negative 56.6 billion to negative 39.6 billion percent, to 15.7 billion percent increase year over year, to 57.7% billion increase year over year. Over here as well, if we take a closer look at their operating income or earnings before interest and taxes, we see that last March 2023 it was negative 2.2 billion, went to 1.65 billion, to 1.375 billion, to negative 1.28 billion, and then quickly last February, and this is actually when we saw a very large gap up in their stock price right around here. We saw a very big gap up in the stock price. It went from 96 all the way up to 110. That is when they posted a crazy over 1 billion jump into positive operating income. And during this earnings, we actually saw that head into further operating income territory to $719 million in operating income. That's a really big jump, considering that just 1 year ago they were at negative 1.761 billion in operating income. So this chart will only show you everything from February and previous, but if we continue to look in this chart, let's just say for example that we're looking at 5.824 billion on revenue and then 191 million on operating income. If we go back here, this quarter, we had 6.811 billion in revenue and then $719 million in operating income. Over here, what I did, I squared this off in red boxes. $332 million in net income profit. Last quarter was $793 million in net income profit. Now, one might be thinking, why we actually accelerated and then we dropped? Well, what you do need to consider here is that there were a lot of inventory write-downs and income tax impact from jurisdiction. If we take a look over here at this chart, at this diagram over here, we see that their operating income was 191. But then when you come down over here, this is about right in the interest income. And right over here, the income tax provision and benefit, it actually added back 622 million, which made it 793 million net income. And over here, it subtracted 376. And that was, like I said before, a result of the income tax from jurisdiction. They actually have a little bit of a disclosure there in the previous prepared remarks. So that is not really something that I look at right now in terms of net income, because it will stabilize. But if we look at the operating income or the earnings before interest and taxes, it is gradually increasing every single quarter. And I could actually show that over here in the chart. Looking over to the guidance was actually really good. Guidance for next quarter, not the whole year, just next quarter, we're coming at 7.6 billion, give or take about 200 million. Gross margin is coming up to about 33.5%. And that is really coming from around 20% this quarter. So we're going to increase gross margin about 5%. Quarter over quarter. That's a very big increase. This quarter was actually seasonally not their strongest year, so we're going to see another reacceleration in gross margin next quarter. Operating expenses are about in line, and diluted earnings per share is about 61 cents versus this quarter, which was a lot less than that. And this is a GAAP outlook. They're already showing their GAAP figures because of the fact that they're actually net income positive this time. They're happy to show their GAAP outlook. So moving more onto the technicals or the valuation for this company, the stock got a little bit ahead of itself. About 66.82% year to date. Considering the after hours, let's just say they're about 8% down after hours, 8% down tomorrow morning. They are basically up year to date 58%. The market cap as of close is 157.65 billion. So after hours trading, they're about 145 billion. The current price to sales ratio for the forward expectation is 6.3 times as of the after hours pricing. Their guidance for fiscal year 2024, their guidance for the next quarter or fiscal year 2024, quarter 4 revenue sales is 7.8 billion. So after calculating all that, that puts them at a fiscal year 2024 estimated sales of 29.161 billion trailing 12 months. That really, after calculating everything, that puts them at an estimated price to sales forward of 5.7 times. I mean, that's actually not that bad if you really compare this to Intel or Western Digital or Pure Storage. These are all American companies. Like, I would say the direct competitors are Samsung and SK Hynix, but those are traded overseas, so it's very hard to evaluate those two without considering the FX rate. But if you look at these companies over here, Micron, trailing 12 months, it's trading at 8.47. Their forward sales is 6.49 as of close today. Intel is trading at 2.96. Western Digital is trading at 2.49, and Pure Storage is trading at 6. Now, even if we were to compare these two companies, that means that Micron is trading a little bit more expensive than Intel and Western Digital. But again, Western Digital really focuses more on the storage of memory or the NAND, basically the long-term storage of memory. You reboot your computer and then the memory is still there, sort of thing. Intel, they're also an IDM or integrated device management, which does manufacture their own chips that they do design. But I don't really want to include Intel in this whole thing. Very different story. Micron, I wouldn't say is trading extremely cheap. I wouldn't even say they're trading extremely expensive, but they are getting pretty close to what I would say price to perfection. After hours price, you know, it really depends on how you want to look at that one. But when you think about Pure Storage also is in that realm of temporary storage memory, but not in the same classification tier. If you really want to compare head to head with Micron, you really have to compare them to a Samsung or an SK Hynix. So the big question is, would I buy Micron here? So for me personally, I did extend out a swing trade on the stock. I had a really bad entry after hours. I didn't do a limit order. I actually did a market order after hours, which is a really stupid thing to do, but my entry price was actually 136. Currently after hours trading about 131, which does put me a few percentage points down, but my position is still very small. This is a swing trade for me. It's less than 0.5% of my entire portfolio. So again, this is a very small percentage for me, and we're talking about couple of percentage points of that already small position. So it's not really a big deal if I do lose out in this, but I do want to get a little bit of exposure in the AI data center build out. So that is the reason why I entered this trade. I do think that Micron will recover if the market does stay bullish. If the market does get bearish, we can very well see this pull back to probably closer to 100, where it will get a bit more attractive. That again is assuming that demand still stays elevated and Nvidia still posts those gains. When we think about a Micron, who exactly is ordering their HBM3E technology? That would be something of an AMD or Nvidia. If Nvidia is ordering this hardware from Micron, that is because they are seeing the demand on their end. They will not order this ahead of time unless they expect it to manufacture or send these orders over out to TSM to build it out for them. So with that closing, there's two things you want to do. One, what is risk tolerance? Is risk tolerance high? I would take in on the swing trade, assuming the market does stay bullish, with a stop loss at a close level below, and with a take profit range that's about 2 times that amount. If I got in at 136, my stop loss is probably around 120, 125. If I do have about 10 or 15 points as my risk range, then that means my take profit should be 2 times that amount. So we're looking at 150 to 165 above that. The previous high was 157. It's very possible that it could retrace all the way down. It's actually at the 50% retracement line here, but it could hit the 0.617 retracement down here to 125, or it could retrace all the way back to 2 months ago, which was 105. I mean, it could go down there. The thing is that my stop loss, my very strict stop loss is 125. If it does go below that, I'm going to look at the price action of the day. I'm going to see, should I get out of this trade? Should I not get out of this trade? Again, this is a very small position in my entire portfolio. I already posted my portfolio in the inner circle chat, so if you guys have any questions, just let me know.